Why listen to me rattle on about it? We've got a true professional, the great Michael Reinking. He is senior market strategist at the New York Stock Exchange, wearing an orange tie, not for Bitcoin, but how about them New York Knicks, my man?
Yeah, I mean, look, there's only a couple days a year that I get to wear this bright orange tie. Halloween, and for a franchise that's had a couple rough years, bringing home the NBA Cup was a perfect time to pull it out of the closet.
And we're all hoping that next June, when the Knicks win it all, you can once again bust it out of the closet.
Exactly.
Can I get your take here? I mean, we oftentimes, when we see the broader S&P finish at session lows, sometimes that can lead to a gap down for trading tomorrow. What did you see in terms of price action flipping decisively from positive to negative today?
Yeah, so I mean, once again, we continue to see some fracturing within that AI trade, right, and that really kind of led markets lower. We continue to see the technology and the AI complex, really underperforming. We've seen kind of a broadening of the rally. We did see broader weakness today, right? But as you pointed out, you saw some of the more defensive areas of the market outperforming. Now, in terms of the S&P 500, right, we did break the 50-day moving average, right, which is kind of a medium-term moving average, which a lot of kind of quantitative-based models kind of focus on. So we broke that, extended to the downside this morning, and then Friday, right, we have quad witch expiration and the quarterly index rebalances. Right, that's the last very big liquidity event of the year. Right, we saw a big closing auction and weakness into that closing auction today in preparation for some of that. Right, so we could see a little bit, some more volatility in the next couple of days.
Yeah, let me skip ahead to Friday's options expiration because it's a big deal here at the New York Stock Exchange. I don't know how many average retail investors closely track that sort of stuff from home. What do we usually see for a day like that?
Yeah, absolutely. So what we see is increased auction sizes, right? So that's quad witch or triple witch expiration is the expiration of index options, index stock options, and index futures, right? And what we do tend to see is very big opening auctions, and then the closing auction will on these quarterly dates exceed 1 billion shares into that closing auction, right? We've seen historically large closing auctions over the last couple of years, continuing to break records, kind of year over year.
Can I get your perspective on the biggest catalysts on your radar as we head into 2026? We're done with the Fed, at least for now, but a few more key pieces of economic government-based data maybe to chew through and maybe sets the stage for a Santa rally starting around Christmas Eve or so.
Yeah. So that Santa Claus rally is scheduled to start next Thursday, so a week from today. Kind of pay attention to that. The last 5 trading days of the year, and then the first 2 of the next year. But in terms of kind of catalyst, right? We have the big liquidity event on Friday. Tomorrow we have CPI. Right now, that was right on the back of the labor market data that we got yesterday. Right, that was some mixed data. Right, a little bit of something for both doves and hawks to chew on within that data. Right, but the idea that Fed Chair Powell kind of told you that there were going to be large distortions in a lot of this delayed data, I think de-emphasizes it a little bit, right? But we are going to get another round of data ahead of that next Fed meeting, in January. So I think that's really kind of the more important thing to focus on from a monetary policy perspective.
Something I like to look at this time of year is how accurate were the price target projections from analysts on Wall Street 12 months ago with their expectations here for 2025, and also what do they see for the tail of the tape for 2026? How closely do you track those price targets? Because they get talked a lot about, and obviously you got the bulls, you got the bears, and you got everyone else kind of in the middle.
Yeah, and so, look, I mean, I think that's it's like a one point in time, right? So it's kind of hard to kind of grab that one point in time. I'd say, generally speaking, right, the street was pretty positive coming into this year. I think they got the sequencing of, kind of how things played out a little bit wrong, where we saw, there was this expectation you would see a strong first half of the year and some weakness potentially in the back half. It was actually flipped, with all of the policy turmoil that we had earlier this year. Kind of at this point, right, there's, pretty broad-based, kind of bullishness across the street again, kind of this year. That's really kind of being driven by the fact that we have kind of supportive monetary and fiscal policy, right? And we're looking to see some expansion of kind of earnings, and the earnings profile, right, has really been the driver of much of what we've seen over the last couple of years. I think the one thing that kind of concerns me, there's 2 that concern me from that perspective. A, the amount of bullishness that we do see. And B, if you look at the 4-year presidential cycle, the midterm election year does tend to be the worst of that 4-year cycle.
Yeah, that's really worth noticing, especially if we get a little bit closer soon enough to the really midterm election cycle. We're not really there yet in the news cycle, but once we get to January, February, we're invariably there. The great Michael Reinking, senior market strategist at the NYSE, New York Knicks, super fan, my man. Thanks for being here.
Thanks for having me.